Assalamu alaikum. I am Shahjahan and I am currently enrolled the Bachelor of Business Administration program at University of Rajshahi. Today I will go the discussion about the summary of monetary policy and the significant change the last 2 years, the monetary policy, the tools used by Bangladesh banks and suggestions about the policy. So, first of all, we have to know that what is monetary policy. Basically, monetary policy is the set of actions to control a nation's the total money supply and achieve economic growth. Uh, the monetary growth set the authority of monetary policy, like the central bank. Most of the countries, this monetary policy set by the central bank. In simply, we can say the monetary policy is the control of the quantity of money available in the economy and the channels by which new money is supplied. Then we have to know types of monetary policy. Monetary policy are seen as either expansionary monetary policy and contractionary monetary policy. In case of expansionary monetary policy, in this case, the authority set the lower interest rate. So, when the authority set the lower interest rates, what type of effect faced by the country, like if the interest rate is low, uh, becomes general people are demotivated to saving. There are inverse relationship between the interest rate or discount rate and the saving rate. If the interest rate uh, is small or lower, people demotivate to saving their money. If the saving rate is lower, the investment will be hampered. In case of contractionary monetary policy, in this case, if the interest rate is higher, the general people will motivate to savings. If the savings is increased in terms, the investment will be increased. So the relationship between the interest rate and the investment is inverse. Sorry, uh, it is similar. If the interest rate is increased, the saving also increase and the investment also increase. Now I will discuss the last 2 years monetary policy in Bangladesh. According to the Daily Star, the heading was Bangladesh strains the tide to tame inflation. Bangladesh Bank maintained its tight monetary policy stance for second half of the current fiscal year 2024 to 25. The Honorable Governor of the Bangladesh Bank, Ahsan Ace Mansour, said that the contractionary policy will continue until the inflation rate decreases. Now we see the basic um, difference in last 2 years physical policy in Bangladesh Bank. In 2024, the inflation rate was 11.66%, the highest level record since September 2011. In January 2025, the inflation rate was 9.94%, and the fiscal policy was 10%, and new fiscal policy also 10%. There is unchanged the uh, interest rate or discount rate, and the 24, the private sector growth rate was 7.3%, and in the recent or currently private growth rate is 9%, and in 2024 the standing lending facility was 10%, and the standing deposit facility 70%, sorry, 7%, and in current year the standing lending facility is 11.5%, and standing deposit rate is 8.5%. Now, I will try to discuss the monetary tools that central bank use to control the money supply. First of all, open market operations, and second, reserve requirement, and third, discount rate or interest rate. These three are the basic tools that Bangladesh Bank use to control their money supply and achieve their economic growth. First of all, I will discuss the open market operations. So, what is open market operations? Open market operations is the terms when the central bank buy and sell securities like bond, treasury bill, etc., etc. Purchase or sales in open market. In case of purchase, when the central bank purchase the bonds from commercial banks, in this case, uh, the economy affect and the goals of Bangladesh banks is they try to decrease money supply. In case of purchase the bond by central bank, they hold money from the market and the money supply decrease. In the case of central bank sales the bonds or treasury bills to commercial banks, in this case the uh, money supply increase. If the central banks wants to increase money supply, they sells their securities, bonds, and treasury bills sales to the commercial banks. The second one of the monetary tools that's used by Bangladesh Bank, reserve requirement. If uh, uh, so, first of all, we have to know what is reserve requirement. Reserve requirement in terms that denote a special amount of money that commercial bank must be deposited to the central bank for their safety. It depends on the policymaker or Bangladesh Bank's policy. So, whatever, reserve requirement affects the money supply of the economy. This process is when the central bank set the higher rates for a required reserve. In this case, the lending amount of money is increased to the commercial banks. When commercial banks has a small amount for lending money. Uh, in this case, the money supply obviously decrease, and when the central bank set low reserve requirement rate, in this case, uh, obviously commercial banks hold a large amount of money for lending. In this case, the money supply increased and discount rate. That's I discussed in previous. If the interest rate is increased, people generally wants to saving their money to bank because investment face the higher risks. But in this case of bank saving, people always try to avoid high risk, so that they will go to savings and inverse to the lower interest rates. But uh, the basic point, if the interest rates favorable, the investment will increase. Now, the suggestions for um, the monetary policy. Now, the monetary policy must be maintain the balance rate. That means the marginal rate or equilibrium rate. If the supply of money and the demand of money or the market is equal, so we can follow the graph xyz, the vertical axis and horizontal axis. uh, y-axis says the interest rate, and x-axis says the demand. If the interest rate increase, the saving rate increase, and the interest rate decrease, the saving rate decrease. But if the rate is equal for demand, the economy stable and balanced. So this is my presentations. Thanks for listening me carefully.